I mean, a lot of what I could say, I really probably shouldn't be saying, but it was the wildest offer in my life. I think we'd have raised quite a lot more had it not been for it. I was like, what kind of guzo is this? No, some of these same funds have been burnt by APOs in times past. Maybe they may say they were on the rights issue. I've never seen anything unfold the way that did.
Welcome to the Limitless Podcast, everyone. My name is Theon, one of your hosts, and joining me as always is Matthew. Say hi to the people, and Matthew.
Hey guys, what's good?
Greetings. And so, of course, we have a return guest. Very, very special guest as always, Sir Ryan Strachan. Welcome, Ryan.
Blessings. Good to be here, guys.
Man, always good to have Ryan on the podcast. Always willing to answer our calls. And we said, yo, Ryan, let's have a little chat. Let's catch up on the Limitless podcast. So we really appreciate Ryan for that. All right. Okay, Ryan, welcome back. So how are you? How has it been?
It's been good. It's been busy. It's been emotional. It's just been a lot of work. I've done something very unusual, which is give a lot of my time to one transaction, which I never usually do, but
Mm-hmm.
circumstances require that it happen that way. So just coming off that hill, coming off that 138SL circumstance, and just the timing of it. Well, I've been good. Kind of feel like getting back to myself, back on the road,
Mm-hmm.
back making things happen, trying to finish the year strong, and then let's see what next year brings. But been good. Lots of travel, so I was tired of that too. It is what it
Okay.
is.
I mean, the last time we spoke was actually at 138. Was it almost like, was it the investor briefing?
Yeah,
I
the
believe
briefing.
at Terra Nova. Yeah. And we spoke. We had a conversation, and I said I really did like the deal. And that wasn't a lie. As much people are like Theon saying he liked the APO, but yeah, I really did like the deal. I mean,
Yeah.
promising a 10% dividend yield it still is. It still sounds pretty good, you know. So I can't knock something like that. Uh, so talk to us. What was the whole what was it like? Oh, on your side, because from the outside looking in, clearly it's different. But from your side, how was that whole? Yeah.
Well, it all came together. I remember telling you. So the truth is, at every transaction, the broker executes on behalf of the client. First, the broker has to determine if it's something they want to do and if it fits into their business for the year or for the 2 years or the 6 months in question. So, we thought 138 offered tremendous value. We thought it offered tremendous diversification in terms of the offering as real estate. Well, not so much real estate, but student accommodation, which, as persons who recently left school is can appreciate that that market is relatively inelastic, unlike real estate that can be subject to all manner of things. It can be subject to interest rates. It can be subject to quality of tenants. It can be subject to the dynamics of the neighborhoods in question. In this case, you're talking accommodation at UA, and students are going to go to UA for a very long time. So we thought it was worth a shot. It seemed most the industry was with us, which it turned out to be, but there were two critical opinions, I would say, for different reasons, which I'll get into a little later, that I think perhaps shifted things at the 11th hour. However, the first thing I think was that, obviously our market loves, I think, new and fresh offerings. So you already know with an additional public offering, you are pushing a boulder uphill. And that's pretty understandable standard from a retail standpoint. But this deal it wasn't really retail. It was really about high net worth individuals to the extent that they wanted it. And more importantly, or more pertinently, funds. The fund market is very liquid. it has its funds replenished every month. If you think about it, a pension fund gets contributions monthly, so it has to
Mm.
deploy capital monthly because the carrying cost of the cash is expensive. I mean, they have to be paying pensioners, and if you think about it, when you see all the old people line up in the respective payment agencies, that's they're collecting a pension, justifiably. So that's an expense. So they need revenue. We thought that with the dividend yield that's coming, the revenue was likely to be provided. So working through that, we had to find a way to communicate to the public the differences in the offering, while at the same time trying to satisfy the pension fund community. And seeing we're getting there, the briefing was empty. I think a lot of, for reasons, could be a multitude of reasons. Personally, I've said that I think 138 needs to do a better job of presenting itself to the public because a lot goes missing. You have student influencers that can be used to share about the virtues of the business.
Very
And this
true.
is not like taking out newspaper ads or anything. It's really about being innovative in how the business is presented to the public because at the end of the day, we've seen companies of much lesser means market themselves really well and attract capital. So therefore, one can reasonably say that the whole way of marketing oneself will be good. So the briefing happened, and then we got to what came after the briefing. Oh, then we started to solicit opinions. We then turned to getting broker reports. I mean, a lot of what I could say, I really probably shouldn't be saying, but I kind of feel like hopeful that the wrong person would stumble on this podcast. So, but but it was the wildest offer in my life. I have done a lot of deals. I think it was literally Murphy's Law at
Mm.
work. I've never seen anything unfold the way that did. And I think, I alluded to it before, and this is not placing blame on anybody, it's just how it all turned out. I think, what can I say? I think that the business is a good one, and I only say it because I think it's something that I really want to be taken seriously by them. I think they're doing themselves a great disservice in not letting the wider public know how good the business really is, and I think that's opened up a lot of room for misconceptions. I've heard people say to us, well, how does the money come in? Does it go to you, or does it come to them directly? It goes to them directly. And
Yeah.
there's other concerns that, oh well, the issues they had with like the mold and all of that is stopping people from going there. I said, but they're at 100% occupancy. People calling me to beg me a favor to call somebody senior to get them a space in the hall in September because them can't get no space. This is from April, right?
Wow.
And then
Mm.
then I think some of the other issues like COVID and all that, which is out of anybody's control. Then you
Mm-hmm.
have some people saying that you are going to go wild and virtual for good, so you're not going to be university and people not going to be going there. So that's impossible.
Yeah,
But
that's
these are the
crazy.
things that come up, and the truth is there's a gap in public understanding,
Yeah.
unfortunately. But anyhow, so start to get opinions, and I think we got 10, 8 positive, 2 private but positive, 2 negative. That
Mm.
was how it was broken down. Proven one was, I mean, proven's kind of small, so we really weren't concerned about that. But proven, and I mean, they have a right to say do not participate, which is fine, and I have a right to say that they were misguided, and so free speech reigns, right? I
Mm.
think they misread it fully, but it's understandable. I mean, everybody broadcasts their own opinion, but that was particularly unfortunate because they manage our pension fund that wanted to participate. So that was really, or would
Mm,
have been inclined to participate. Let me put it that way. And so that was really that. So we thought, well, I mean, that's fine. And we gotten word from most the other brokers. The second one went out to the whole world, right?
mm-hmm.
And had my phone blowing up for hours. And I was like, what kind of guzo is this? No. Bear in mind, I'm not thinking about my substantive business, which is trading and US markets and all of that, because this dominates our life.
Yeah.
I mean, I'm in Miami. I'm doing presentations when I'm in Miami. I'm doing presentations when I'm in Trinidad. No, I source IPOs. I source deals. I don't sell them, right? I have not sold an IPO since probably 2013. I don't sell an IPO in 10 years.
Which IPO was that?
That was Creamy. No, that was Jamaica Stock Exchange, I think it was.
Oh.
Yeah, JSC. I have not sold an IPO in 10 years. Right. So when you see me like doing presentations to brokers, normally I just moderate the sessions and I deal with the clients. But this one, had to get involved with it. And I'll be honest with you, I think we'd have raised quite a lot more had it not been for that second opinion.
Mm-hmm.
Because that was with a much greater reach. But as Ian said in some of the interviews afterwards, the good thing is that perhaps with the amount raised, the business will have to just do what it's doing out of cash flow.
Yeah, because they raised what 500 million. So
The newspaper article stated somewhere close. It's in that range. It's not far. They never lie.
mm-hmm, mm-hmm.
So it will, they can offset some of the debt and they can just continue to generate profit really. Because, I think I think some of the guys also missed was the shift in performance in the business once there was no pandemic and there was no build out. And I kind of still fail to understand how that was missed, that COVID had a deleterious effect on the cash flows of the business because people couldn't go to school, you
Yeah.
know.
Yep.
But be that as it may, I mean, I still think it was a worthwhile pursuit. Believe it or not, it is my largest fundraise because I'm not a fundraiser.
Mm-hmm.
It's our largest fundraise. In fact, can I say this? We made more of this than Spurtree, but believe it or not.
Really?
So yeah, so fact, or any other IPOs we've done. So that was give you an idea of, it was despite the disappointment and not getting there.
Yeah. I mean, you still raised money, so
Yeah, I mean, somebody looking at it, we're like, yeah, you missed. I said, yeah, but pockets never felt too bad. So
yeah.
Yep.
it
you
could
know,
be worse. It could be worse, because I
right.
tell you, it was a hell of a lot of work.
What do you think was the hardest part about the deal then? Like, what was the part I was like almost felt like pulling teeth?
I think to get to communicate the reality of the business. I think people just did not appreciate what the business was, and to convey again the understanding that COVID was one off, and when they were constructing the towers was one off, and as we'll see in the September numbers, it's
Mm-hmm.
still going to be a shift. My read is still going to be 18% above last year, occupancy above 90%. and consistent with their projections. So that was the hardest part, trying to get people to see the value, because there are persons who are just dead set against it. And that's fine. I mean, listen, it's business, right? We don't have the right to put our hands in anybody's pocket. And any stockbroker will tell you that, that you can't force anybody to buy into anything.
Mhm.
But at the same time, you still have to share what you think is good. So that was the hardest part.
Mm-hmm.
Mm,
That's the hardest part.
okay. What do you think could have made the deal easier?
I think if the business was better marketed, more people would understand what it was all about.
Mm,
Because even if you look at Jamaica Stock Exchange, a lot of the businesses listed, especially the older ones, they don't really market themselves well enough. There was never a time where they were required to market, because they listed and then it was a thing of, well, the stock don't trade. So we don't really need to go out there and make anybody know about this thing, right?
mhm,
I mean, there's some wonderful companies out there that people don't know about, like Epley. People don't know Epley does, Stanley Motta. They don't know what these guys do, but these are
Yeah.
cash
mhm,
flow positive, very, very, very good businesses. I mean, if you contrast that with like Wisynco, for argument's sake, Wisynco is a well marketed business. Where the ads on TV and the water, this and whatever, whatever. But then again, the other side of the argument is, well, we're just operating off cash flow. So why do we need to market? Students know us and the market is small. Fair play,
mhm,
right? That's another good point as well. But I think awareness around the brand would have made it easier.
mhm,
We said, listen, well, we'll raise some money for us because then go and buy Nabisco, because I can't use any local example. Let me buy Nabisco. Then we're like, all right, cool, take our money. You know?
mm,
Mm-hmm.
But the unknown and the fear of the unknown, and the fact that some of these same funds have been burnt by APOs in times past, made it a challenge. But I said to people, listen, the investment banking team now knows how to sell. They've sold this thing like nothing. They have a database of contacts and that are better for it. So
Yeah.
mhm,
So you're saying you would do another APO again?
yeah, man, the right circumstances, of course. Why not? It's just capital. I mean, it's capital. It's just about what's the story behind the capital. I
Mm-hmm.
personally don't think acquisition based APOs necessarily are always exploratory. I should say APOs are always. I don't think they're advantageous. I think
What do you mean exploratory APOs?
example like Derriman buying whatever the companies overseas. I mean, we don't
mhm.
know how that would turn out, and thus far it has not worked well. Though we know that business takes time.
Yeah.
It's been quite a time now.
Yeah,
Mm-hmm.
you're exploring, right? Because and they bought existing companies. Similarly, if we're buying, if unless somebody's buying like an established cash flow positive, this is that and the other, then we don't know, you know.
Mhm,
So I think it's really about the use of proceeds are for. That would be the ultimate driver than anything else. I mean, there's questions. I mean, Barita has done these APOs. What the hell they use the money for? So that's really, I think the use of proceeds should drive it, because I
Mm-hmm.
mean they did rights issues and share price languishing, profits actually are actually falling, and if you look at non-cash profits, it's falling even more if you back that out. So I think it's not an issue with the APO in and of itself. I know the dialogue is out there. I know retail says whatever, but when we're going to market, retail is is a very necessary component. But if you're talking billions, it's really, I mean, it's
mhm,
going to take a lot more than retail to do that. But you want retail for many reasons. You want people to buy in. You want thousands of shareholders. You want the positive sentiment. we want some realism about it. Funds are much harder to sell to, so it's a double-edged sword. But they have the money, so what are you going to do?
Yeah, I mean,
That's
we
true.
spoke about that point on one of our most recent videos, how to pick a stock. We said that one of the things you should look for is efficient use of money. So a company can, raise a lot of money, and it's really a lot of times it comes down to what they do with the money. And if you look at it, the acquisition is actually very hard to actually lead to, for example, an increase in the share price. It really, you have to get the acquisition right. And if you look at it, even you mentioned the example of DTL, but even
Hmm.
JMMB, um, was that good use of capital? Something that I'd be like, I was when you thought it made me think about, what would be an example of a company that could have maybe used an APO for an acquisition? I thought of maybe Transjam. So I was thinking, could Transjam, in the setting like with Transjam, that acquisition is different because it's essentially them paying out those huge fees to JIO, Jamaica Infrastructure Operator. That could have been a possible better use. If well, the thing is they had the cash and stuff like that, so I don't necessarily think they would have to use the APO. But in a situation like that, I think that wouldn't have affected, I guess, the share price as much if they had done something like that. Yeah.
It's immediate. It's immediate,
Negative.
right?
That would, yeah, it could have more
Mm-hmm.
positive effect on the share price, is what you're saying.
Mm-hmm.
So
Yeah.
yeah, you're right. It depends on the use case.
Yeah.
Really have to look into the use of proceeds.
On your point about the marketing, I definitely agree that a lot of companies right now, especially the older companies, they aren't really marketing. What I've noticed now is that a lot of the newer companies, they are pushing, they're partnering with certain influencers and stuff like that. They're hosting forums, they're on YouTube, they're answering our questions, things like that. I think, and if you think about it, it makes sense because if they ever want to come to market for an equity raise, you want investors to know about your business. So if I'm an investor looking, a retail investor, if I've been seeing this business on YouTube for 5 years, telling me all about the business, answering my little silly questions, I feel a lot more comfortable giving my money to them versus a company that barely puts out reports. In the reports, they barely mention anything. And then suddenly 10 years later, they want my money. It like I don't feel as comfortable giving you my money versus the company that is actively explaining what's going on in the business, answering my questions. So even from that point, if the business wants to do something that they need an equity raise at some point, it helps to have your investors know more about your business. Even if it's not even an equity raise, even if it's a debt raise, I own shares in a company, but you issue a bond. If I understand more about the business, I'm more likely to give you my money.
Absolutely. It doesn't hurt, right? And with social media now, there's so many avenues to raise awareness. It's almost, I don't want to say inexcusable, but one just cannot go around the lack of awareness of any listed company,
Mm-hmm.
of any kind. I've seen entities that are not worth their weight in salt, I'll put it like that, who everybody know about because they find a way to get the word out there. And that is what I think is a differentiator. But secretly, I can tell you, without getting too much into the whole thing, I thought the amount sought for the offer was a lot. And I never necessarily believed that what that much was needed, but being subject to the desires of those concerned, you kind of shoot for the stars. Because you think about it, we could have said we only need $1 billion and raise 100 million, right? And then what happens?
Yeah.
Then you can't use anything. So I'll say that what we did was, enough for the time, and I think hopefully looking forward, they continue to share the good word. Their numbers will be good, and more people can benefit. And
Mm-hmm.
perhaps who knows? Maybe they may say they want the rights issue or another APO, and they choose to use us or another broker. It's fine, but we're here for our clients, so
Yeah. I think you guys did well. Just in terms of even how the market is currently, I think you guys did pretty well to raise even that amount, because the market right now is not looking. I mean, it's still a bit bloody. It's still a bit red. Things are moving now, but very slowly. Yeah, it is pretty tough. So
We took great pride in it. We
yeah,
took
that
great
too.
pride in it. Yeah, man, no lie. We really were.
And I think it also even this now sends a message to, although possible APO is coming up. I know NCB's APO is coming up.